$1.6 trillion. That is roughly how much has been invested into artificial intelligence between 2013 and 2024. Add to that the forecast of $375 billion expected to be invested in 2025, and you have nearly $2 trillion invested in AI over the past 12 years. So, is there a bubble? First, let's understand what AI is. You can skip this section if you already know. A timestamp will be on the screen. IBM.com describes AI as technology that enables computers and machines to simulate human learning, comprehension, problem-solving, decision-making, creativity, and autonomy. Lots of big, complex words, but basically a machine that can learn and hopes of a day when it can become a real human. That last part's a joke. Well, I hope it is. So now let's talk about bubbles, the market kind. Investopedia say that an economic bubble is marked by rapid escalation in asset prices, often due to speculative behaviour, followed by a sharp contraction. Put simply, a large group of investors believe that something will grow rapidly. Their money floods in and prices rise faster than fundamentals can justify. Eventually, expectations fade and break. This causes prices to fall sharply. An example of this is the dot-com bubble in the late 90s. So, how does AI compare? By the end of 2025, near $2 trillion will have been invested into AI-related development. In 2013, estimated investment in AI was around $700 million. Compare that to the potential $375 billion of forecasted investment in 2025. That is an increase of over 50,000%. At the same time, the estimated market size of the AI industry is around $300 billion, and in 2032, it is forecasted to be roughly $1.7 trillion. Now, we may be thinking the same thing here. The amount invested in AI may exceed the industry's market value for years to come. However, let's clarify this. Investment spending and market capitalization are not the same thing. Much of this capital isn't going into software companies alone, but into infrastructure. AI is extremely resource intensive. Not only in RAM sticks, no, those prices are diabolical. I can sell the RAM that I'm using right now for an extra 300 quid. It is stupid. But anyway, let's get back to the video. A large portion of investment is being directed towards data centers, chips, and powerful infrastructure. In the UK alone, it's estimated that 100 new data centers will be built over the coming years to support the demand of AI processing. These are expensive, long-term physical assets, far from the dot-com era, where much of spending went into websites with little revenue. Investments in infrastructure today can generate cash flow over decades. The bull risk isn't eliminated by these physical assets. However, it does change the nature of it. So the nature of the questions we should be asking shouldn't simply be, is there too much going into AI? They should be framed as, are expectations rising faster than real sustainable return? Looking at the past and learning from it can help us from making the same mistakes again. The potential AI bubble is being compared to the dot-com bubble. Now, is this a fair comparison? Some say yes, others no. Well, let's have a look for ourselves. We'll start with some similarities. One similarity is the amount of venture capital being invested. In the dot-com bubble, 39% of all venture capital investments were going into internet companies. This wasn't just for profit. Investors believed that the internet would reshape the economy and everyday life. We can see similar patterns today with AI. In an article written by Sophia Panel, she states, AI startups reached a record of $192.7 billion globally, surpassing 50% of total venture capital funds. And in the UK, Oscar writes, UK AI startups raised £1.7 billion in venture capital funding in the first half of the year. AI companies represented 30% of all venture capital funding secured by British companies in the first half of 2025. This level of concentration by venture capitalist funds is similar to the 1990s. However, similar capital flows don't confirm or rule out bubble, because unlike the dot-com companies, AI isn't a concept we need to wait for. AI is already being integrated into consumer products, cloud infrastructure, and business operations. Also, a large portion of today's investment is coming from profitable companies and established institutions, not just speculative startups. The risk is still there of a bubble. but if there is a bubble, the nature of it will be different. So, is the AI boom a bubble? We've looked at reasons to be cautious and reasons not to panic. Undeniably, the scale of investment is large and growing. Expectations are high and capital is flowing quickly, with uncertainty when returns can be expected. However, unlike the past, AI is already delivering real economic value, and the funding is coming from profitable companies. What matters is that we keep sensible expectations, and don't get lost in the hype of innovation. If you made it this far into the video, thank you, it means a lot. Comment below what you think about the potential AI bubble, and please remember to like and subscribe.